good afternoon, everybody, and welcome to the Digital Assets panel. So I'd like to, first of all, introduce my panelists. So let me kick off myself, if I may. So Keith Baer, I'm a fellow at the Centre for Alternative Finance, which is part of the Judge of Business School at University of Cambridge. My background is IBM. I did a lot of the blockchain work in IBM for capital markets, including CLS, which is in production for 18 months, I think, in terms of IBM's involvement. For those of you not familiar with the Centre for Alternative Finance, we publish a lot, freely available on our website in terms of crypto assets, the regulatory landscape for crypto assets, and also enterprise blockchain. So please take a look if you're interested in looking at some of our research. So if I could hand over to Jo to introduce herself.
Is this on? Yes. So my background is financial markets and public finance. Some of you may have heard of the government bond issuance pilot that I was the ideator of several years ago, which once we successfully completed the pilot, was then proven in real time by the World Bank going on to issue 100 million in bond technology, using that technology. I'm also the executive chair of the advisory board for Civic Ledger. Katrina Donaghy is the co-founder and CEO of Civic Ledger in Australia. It's a multi-award-winning blockchain platform provider for civic services, particularly around natural assets such as land, water, and IP. Thank you.
Hi, my name is Sven Werner. I work for a company called State Street. So for those of you who don't know, we are like a global custodian, I think the second oldest bank in the US, around 200 years. We only have one thing that we really do, which is we safeguard assets of institutional investors, pension funds, mutual funds, and provide risk services around that. So my job really is to look at blockchain digital assets, whereby the definition of how these assets are being created, traded, settled changes, and therefore it will require a change also to the custody service of those assets.
So my name is Victor. I am a partner at Rockaway Capital. We are a very traditional private equity VC firm with 500 million asset under management. We also have a blockchain division. We invest only into projects with traction, and yes, there are some. And that division is $100 million a target to be invested over the next 4 years. Yeah.
Great, thanks very much. So Jo, if we could start off with you. Over the last couple of years, obviously, we've seen a steady evolution, I guess, from ICOs to security token offerings and IEOs as well. Any comments in terms of what your view is of the appetite to wholesale investors as far as these initiatives are concerned?
Wholesale investors require regulatory certainty and a high degree of liquidity in the markets in which they operate. The markets themselves are highly regulated, and the institutional investors obviously have mandates or benchmarks that which they have to manage to. STOs, that from my view, is there isn't liquidity or sufficient liquidity at this stage, and the regulatory environment, as we've heard today, is obviously not clear, and you know, there's a lot of evolution that is required for the majority of wholesale investors to be in that space.
So maybe picking up on that point, so given the lack of regulatory clarity and liquidity concerns as well, Victor, what's your view in terms of how things are going to evolve?
Yeah, so I think we've been in the space for a long time, yeah? The ICOs raised $18 billion altogether. Last year, 250 million. IEOs last year raised 350, STOs 450. Yeah, so there is a bit movement towards STOs, but all together STOs raised 1 billion, ICOs 18 billion. So ICOs are still, 20x of the current market of STOs. And why is that? It's because in 2017, 2018, everybody wanted to be a VC. Yeah, like basically retail investors tried to get rich by speculating on projects which did not have traction, they did not have revenue, those were only future expectations. And some smart wholesale investors tried to get rich on those retail investors by investing in the pre-sale and trying to negotiate discounts with projects. And obviously that did not work because those projects did not have traction. So I think liquidity is the end game, which we are still all of us trying to reach in STOs. I think the core problem is lack of good assets to invest into.
Okay. Interesting point. So I would argue, besides the point on assets, there's also a question from an institutional point of view on the maturity of the financial markets infrastructure to support the growth of digital assets as well. So here in the UK, we obviously have new exchanges like Archax, who are hopefully getting their regulatory approval soon. We have SDX in Switzerland, which are due to go live hopefully by the end of this year. We have the London Stock Exchange Group and the work they're doing with Novora. So Sven, if I could turn to you, what's your perspective on the way the exchanges are developing, both here in Europe and more globally, and the impact that will have on institutional interest around digital assets?
Yeah, and maybe also picking up from Joe, this point around what institutional investors want, a marketplace that is subject to some sort of supervision, some policing, if you want, I think is an important aspect. So a regulated marketplace for many of these providers, I think, is a welcomed initiative. My experience at the moment is slightly different. So when institutional investors, and we obviously deal with a specific kind of institutional investors. Typically, these are regulated funds. These are not family offices. So therefore, they have very clear guidelines, both regulatory-wise, but also from their investment guidelines and what they can invest in and how they structure that. Typically, at the moment, they are not really looking yet into this full-fledged trading environment and basically trying to create an alternative digital asset market structure, but really, where are there situations where you know your counterparts and you could therefore create a market infrastructure where there's none yet. So one instance would be if people have regular issuance for refinancing, it could be a corporate and they sell to 5 banks every quarter. These kind of structures I would think are the first who would use a digital asset marketplace. And then only at a second stage will you then see more traditional exchanges and marketplaces to come. But we need to have that happening, otherwise what's the point? I mean, everyone thinks digital assets will drive liquidity. If we don't have marketplaces that can provide that liquidity, I think it's already about to fail before we have even started.
And Sven and I have a private bet going on SDX's timescale for production at the moment.
Oh yeah.
No comment on that.
No comment.
Joe and Victor, anything to add to that point on exchanges?
The one thing I would say is we're seeing the evolution of new markets as well. So, where there's been a lot of talk today about the financial services space. And I guess that's the background that we share. But I would also say, putting my chair hat on for Civic Ledger, they're doing a lot now in water markets and water trading. So I would say that for custodians and exchanges, and the ASX is an example, they'll be looking at how they, once they get their sort of first platforms up and running, with ASX, it's for the equity markets, obviously. They'll be looking at then the other markets, and we'll see new markets emerging as well.
So I think T0 raised $134 million in STO. They have no daily volume, or there is, I think, around $30,000 of daily volume traded on T0. Yeah, and but from the US perspective, they are meeting the regulations. Yeah. I think, again, the problem is the lack of attractive assets trading on T0. And I think if you look at others like Coinbase, they can also support security tokens. You can actually buy blockchain capital security token, but I think daily volume is something like $19,000. Yeah?
So tiny.
And blockchain capital raised $10 million in their STO, and it cost them $1 million in advisory fees. Yeah? So it's still an early market.
It's a good time to be an advisor, maybe. Moving away from the exchanges to the custody side. So obviously, that's a hot topic in Europe at the moment. We have Fidelity and their digital asset business expanding in Europe. We have Gemini starting up in Europe as well. So Sven, do you want to comment from a custody point of view in terms of how important that is to institutional investors and how you see those developments expanding?
Yes. So it's, I mean, as you can imagine, working for custodians, basically what I do 90% of the day, thinking about how custody would evolve going forward. For me, there's still a very different answer to that question. What is digital custody, whether I'm dealing with crypto assets such as Bitcoin versus security tokens. Number of reasons for that, both technology but also your risk vector, but fundamentally custody in the sense of a regulated activity that a bank is providing is a legal construct. We are dealing today with indirect holdings where you need to prove control of the assets, you need to be able to segregate those assets, and in some ways that doesn't easily translate into a blockchain environment, particularly for Bitcoin, where there's, and similar assets where there's no identifiable issuer. So how you provide custody is somewhat unclear, and so you'd always end up in a kind of record-keeping activity, which is very similar to what banks do today or custodian banks do today. For instance, when an institutional investor were to invest in things like derivatives, you can't take them into custody, you provide record keeping. And that's actually what that pilot with Gemini was about. We would, as an organization, consume data about investments in crypto assets that are held outside our network, and we can provide a consistent reporting that then would reflect the traditional assets we have as well as the new assets. There's now consultation going on. Both you see Commission, certain national markets in Germany, like in Germany, France, etc., looking to revise their framework around this. And for instance, BaFin this week issued in Germany some guidelines how a custodian would comply with the regulatory expectations around crypto assets. The SEC, maybe I'm going to close with that. This is sort of one of the things that I haven't really heard a good answer to yet. Came out with some suggestions how a broker-dealer would provide custody for Bitcoin. So it wasn't addressed to custodian banks like State Street, but to a broker-dealer environment. And what they said is you have to do a lot of things, and one thing they want to see is that you can prove for Bitcoin custody that nobody else has your key. In my head, this is still sort of a very abstract, almost impossible expectation how you do that. I mean, you can say I have on a decentralized basis created my key, it was a machine, nobody was involved, but still, do you have a proof that nobody could know it? I don't think you have. And as long as we are in this sort of abstract world where there are ideas that are in my head not practical, I think it will be difficult to see crypto assets such as Bitcoin becoming mainstream.
Interesting. Victor, anything to add to that?
Yeah, so let me tell you a little story. Yeah, I don't know how much time you have. Actually, I do 12 minutes. Yes. So I think in 2018 we said, let's do like Spice VC. Do you know Spice VC? They raised $15 million through STOs on securitized platform. I invested into Spice VC as a physical person. It's not a good investment. So
no investment advice there.
so don't do it. Yeah, this is not investment advice. So we said, let's create a blockchain fund and let's do it, via STO. So we kind of eat our own food. Yeah. And Allen & Overy, I think, quoted us $500,000 advisory fee for the blockchain fund versus $250,000 for just a standard fund. Yeah, so automation or simplification doesn't work. So that's the value proposition number one. Value proposition number two is you are able to fundraise easier because it allows you to access new kind of investors. This is actually not the case because most of the exchanges don't have that ecosystem yet. And thirdly, why would you do it is for the liquidity. Yeah? Imagine you have a fund, some of your investors are, 68 years old on average. They don't want to be locked up for 10 years in a traditional VC structure. So they want to get a liquidity on a secondary market. But as we said, secondary market don't exist. So we went, a very traditional way. So I think, and custody was never an issue in that thinking process. The issue were not even technological issues. The issues were really, cost issue, and then liquidity issue, and then the fundraising issue.
Do you see those dynamics changing? When there are more providers in the market in terms of the legal and the other advisory services?
Yeah, I think the core problem is still the quality of assets that are being tokenized. 100 assets were tokenized overall, and they raised together $1 billion in STOs, yeah? So that's on average $10 million per asset. But if you look at them, 75% were basically just ecosystem players in the STOs. issuance platforms, exchanges, custodians, analytic platforms, and those are not yet ready yet. I don't have traction yet. T0, which I mentioned, generated $8 million revenue last year, but lost in a Q2 2019, I think 10 million. Yeah. So who would invest into such a loss-making asset?
Right. Okay, moving on, obviously one of the more dynamic panels earlier today was on DeFi, so that's obviously a hot topic and a hotbed, I guess, of innovation that's going on at the moment. Any views, Victor, in terms of the role that collateral plays within the DeFi market and the ability of DeFi models to transform the financial system?
Yeah, actually, so we are very excited by this, yeah? So how many of you know MakerDAO? Yeah, Gustav is somewhere here, I think. Yeah. So MakerDAO, you can basically put your Ethereum and get out a loan ratio 1:2. Yeah, fantastic. And that's basically the start of a decentralized financial system which works without a bank. Imagine you can now put as a collateral your securitized asset. So imagine, and this is not my idea, this is Rune Christensen's idea, the CEO of Maker, who said, imagine you are a Spotify artist, not like Taylor Swift, but kind of like second tier, and you are generating $200,000 per year. You can actually take that revenue stream, securitize it, and put it into Maker and take a loan for $100,000, and then just make your studio better. And I think that's why we are still excited about this space, is because you can combine traditional assets that you securitize with a new financial system.
So Sven and Joe, any view on how the more traditional financial markets see DeFi and the impact it may have? Any comments on that?
I would just say that there's a lot that needs to happen, including the dialogue that it hasn't really been occurring with the actual traditional players in this space. I think a lot of the dialogue I'm seeing is amongst the community and amongst the new players that have emerged, which is great. But I think I would say what needs to happen in the coming period, whether it's this year or over the next 2 years, is a lot more dialogue with the traditional market participants for there to be the evolution that's going to, actually occur ultimately.
Yeah, I would agree with that. It's a fascinating topic, and it allows you to think about this. And I think as a representative of a traditional bank in that sense, I mean, when open banking came, I don't know how many years ago, it spoke to that same idea around opening up your services and allowing basically your clients to reconstruct somewhat their value chain. Obviously, DeFi goes much further than just exposing data and allowing external labs to create transactions on your behalf. But it's, I think, a similar thinking, or it addresses a similar need. It also has, we discussed this earlier, I think some implications around custody for crypto assets. So if you think about when that whole debate started 2-3 years ago and everyone was thinking about cold storage, if you have these kind of models where people want to put their digital assets, crypto assets up as collateral, you also need to think about different custody solutions. So it starts to spread out into other areas that need an answer. But I would agree very much with Joe that is at the most early stages, and I don't think it's yet a topic that fully has hit Wall Street yet.
Also, earlier was mentioned the incident on BZX, and not a hack, but obviously an exposure in the platform itself and what happened with the theft. Any views on whether that's dented any confidence in DeFi models generally?
You mean BZX?
BZX, yeah.
No, so I think I think those platforms need to be audited. Basically, BZX had only one issue, that they were taking the price from Uniswap, where the hacker could actually influence that price in the same transaction. Yeah. So and as soon as you are a decentralized financial platform which takes a price from only one source, and someone can, change that source, you have a problem. Yeah. Same thing happened with Deribit. Deribit, fantastic derivatives exchange, not investment advice. But they're taking actually more sources for data, but they had a problem in their code, and Coinbase had a flash crash, and they took only Coinbase as a price for Bitcoin, and it's just put out the traders, yeah? So I think all the platforms need to use, you know, or just use Chainlink as an oracle, because they have different sources of data.
Right, thank you. Yeah, no, there's definitely a learning experience.
Yeah, but only, I think, around $900,000 lost, yeah? So I think thanks to the hacker to be so generous, yeah?
And I guess to your earlier point, you know, if there's going to be more audit to give confidence in these platforms, get more advisory services. So
yes, or you can use Nexus Mutual to insure your position. Yeah, again, not investment advice. Fantastic project.
Okay, thank you. So in the closing 4 minutes, just any comments from each of you, I suggest, in terms of your perspectives on looking forward, and any how will the state of the market look like in a couple of years' time? Joe, do you want to kick off?
Yes, I'm a big believer in the central banks. What did we call it before? The sovereign digital currency.
CBDC.
Yeah, CBDCs. I think they will occur, you know, if not this year, then definitely next year. We will see that form the foundation of the future. Without those foundations in place, I think some of the other things we're talking about are going to get further and further away from being solved. So that would be my prediction for the future.
Yeah, well, I'm very bad at predictions, but I very much agree. The starting point and one of the areas that I'm personally most engaged with at the moment is around cash on ledger. That could either be CBDC, but also private alternatives or hybrids thereof. It's critical for everything. I think we dream about if we can't have a proper cash representation. A lot of the other ideas around digital assets are not going to materialize. The second aspect to that is, you know, if you just have the cash and you don't have the quality of assets, I quite like you brought that up. I think that's a very important point. How do we get some quality assets onto the blockchain? So we are discussing and working with a number of institutions that are looking to create token forms of their existing assets, more in a private, as a private security than in the publicly listed securities. And if you then combine this with commercial banking, stablecoin solutions, I think it could be a start where people can see the value, because that for me is the real issue. You need to demonstrate it out, that it actually can work, and that will attract its own demand for that service. And I think we're still a little bit just before that step where we will see institutional money flowing in.
Yeah, so I look forward to see interesting assets being tokenized. I asked my team, like, guys, what would you invest into? And they are like hardcore IT guys and gamers, so they said they would love to have a gamer who would tokenize his revenue stream on Twitch, yeah? And they could actually invest via a security token of that player into his future revenues, and that player would be able, you know, in such a way, either raise money to grow his team, or again be able to combine his token with the DeFi to be able to borrow against his future revenues.
So the future is assured, I guess, in terms of where the possibilities list. So hopefully you found that useful. I think it's been a very enlightening discussion, so I'd like to thank the panelists, and thank you, Jane.